Today, folks, look, I'm not trying to be preemptive here, but it is quite apparent we are witnessing what could very potentially be the first soft landing. And when everybody was screaming to you sell, what was I telling you to do? The thing you should have been doing the whole time, buying some damn stocks at super suppressed prices. I mean, everyone's GICs, bonds, savings accounts, cash 50%, stack it, sell it, and that just didn't work out, did it? But now we're starting to get a sputter. That Santa rally that's been taking us to the promised land is starting to lose its steam. So we're going to review the broader markets, where we currently sit on the US, Canadian markets. Canadian banks are continuing to rally nonetheless against the backdrop of oil crashing. We're going to talk about the AI bump with Gemini from Google, and of course Charlie Munger's last interview. If that is a damn conversation you'd appreciate, as always, hit that like button, folks. And getting into it with the broad view of the market, we can see a lot of sputtering. It's hit or miss depending on what's performing well. And with oil pulling back so dramatically, that sector is getting devastated over the last week. You take a look at the TSX, very similar. You know, Suncor, CNQ down in pretty much the 5 to 10% range, with tech again being a bit sputtered around and banks primarily leading the rally for the Canadian markets. And if we take a look at the S&P 500 first and foremost, I mean, this week we're up about 0.6%. We're getting there. It's rallying a little bit more into the end of the week here, but over the last year to date, if we just take a look at the October lows, just to get an idea of are we going to rally into the end of this year, and I have a good reason to believe that it should be a pretty bullish 2024 as we head into an interest rate cut cycle. We're up about 12%. We could see some profit taking into the end of the year, but if we compare to prior, years here, when we kind of came into the end of 2022 from October, where every October is the bottoming of a market, we rallied back nicely until the beginning of the year, hit a little bit of a pullback a few times before we kept rallying. Even coming into the interest rate hike cycle out of 2021, October was another bottom in the market. It rallied into the end of the year, and then we saw the pullback as the interest rate started to raise. But now we're going into an interest rate cut cycle, and that's probably going to happen more mid next year, toward the latter half of next year. So until we start getting a little bit more of a sign of that, which could come in the spring, really, that's when the discussions could really start to ramp up, and we could probably get a bigger bull market, depending on how speculative we get prior to that, right? Because if we get overbought, too euphoric, it could be a little bit too extended into that time. But for right now, I still think we're in a good buying opportunity, in my opinion. Look at the TSX here, right? Like we're stuttering this week. We're down about 0.6%, pretty much the exact opposite of the S&P 500. But you zoom out from the October lows, again, we're still up 8%, which is great to see in 5 years. Same as the U.S. markets, every October was always a bottoming. We saw a pullback in October here as well with the TSX. So I mean, I still think we're coming into this is just my opinion. And the only reason I'm saying this is because the speculative market has returned, right? Look at the NASDAQ. It's up 38% year to date. You look at the Russell, the small caps, though it's not up as much year to date. From the October lows, this thing is up 14 damn percent. That came real quick with just a month. I mean, a month time lapsing. Look at Bitcoin here, for example. Over the last week, up almost 10%, the last month 22%, and year to date 163%. If this isn't a sign that speculation is back, I don't really know what is. But what I'm paying attention to here is the big news, right? The AI revolution, I think, has been a bit of a bubble, and I think there's one AI player that's not a bubble that I would personally buy. Great stock, Google, man. How can you go wrong with Google here? Of all the companies that I used to be bullish on, like Meta used to be the prime stock to buy because it was so damn cheap against the S&P top 10 companies. Google right now trades for a multiple of 25. Right? Meta's now trading for almost a 30 times multiple. You compare that to Microsoft at 36 and Apple at 31. Google looks like a steal considering the return in its revenue. Its margins are coming back. They're really starting to revolutionize AI. That's, making ChatGPT even look a bit weak here. Though I still feel like we're in the preschool days of, AI. If you guys haven't seen Gemini, this is what Google launched that drove the stock up so much this week. But I think this is funny. Just take a listen to this.
Which way should the duck go?
Going left leads to a duck, which is a friend. Going right leads to a bear, which is a foe. It is better to make friends than foes, so the duck should go left.
This reminds me of like
Smart
Jarvis.
choice.
I mean, we're getting into like Iron Man stuff here where we can just
This
chat
is
with
a picture of a crab.
That's right.
I feel like I'm in
Is
literally
this the
public
right
school.
order?
No, the correct order is Sun, Earth, Saturn.
Now, I don't really know we'll watch one more. I don't really know what this is going to mean for Google in the long run because it's so early days, but Google is leading, in my opinion, basically in self-driving. They're starting to lead in a lot of these AI models when it comes to these kind of programs, which is just nuts. I mean, take a listen to this
Based on their
one, right?
design, which of these would go faster?
The car on the right would be faster. It is more aerodynamic.
So this is just fascinating and intriguing nonetheless, and this is leading to that huge gobbling up of the new oil, which is chips, graphics cards, and all this stuff, right? So AMD is trying to compete for NVIDIA's pot now because Google, Meta, Amazon, they're the ones that are buying these chips, building out these massive data centers to kind of eat in. I don't think people appreciate like how much data comes into play to make what Google's just showing us with Gemini work. And Advanced Micro Devices is coming for NVIDIA's lunch here, along with many companies. Canon has announced a while ago they can create 2 nanometer chips, and you see AMD spikes after the company launches an AI chip to rival NVIDIA's. Because let's be real, like NVIDIA has this runway right now where they're the leader in these specific kind of AI modeling chips, which has led to this massive explosion nobody anticipated. But this runway is not going to last because the margins they're making are at the 70 percentile range. You're selling H100 chips for $40,000 or $50,000 a pop. Damn it, that just can't last. It's unsustainable because competition is going to come in and compete for that. So NVIDIA has this limited runway, in my opinion, which is how much can they capitalize on what they have going on for how long. Because if they just keep the same growth they're having for the next 2 quarters to 3 quarters, they are going to be getting into Apple's level of net income. Right now they had 10 billion on the last quarter of net income compared to Apple that had 20 billion. You can really start to get a sense that this company is on a trajectory that if no one kind of stops them, especially with the margins they have, they will become the largest company in the world. But at this scale of pace of growth, I just don't see it being sustainable. So there's some risk here of bubbling going on, and I see that again with a lot of these AI companies people are hyped on. And we're seeing a lot of volatility in AI still, like Palantir, a lot of these companies that have caught the wave of social media influence. That always is a true sign of kind of a bubbling territory. So you want to be careful with these kind of companies and be more bullish on these companies that are, way cheaper in valuation that people clearly just aren't recognizing for some reason or another. But shifting into the realm of AI that doesn't make sense, I'm shocked at what McDonald's has been doing. I really thought McDonald's would have been moving into a wave of let's optimize stores, build stores where it makes sense and start basically just roboticizing the entire industry. Because that's where I think the growth would come from for a company like McDonald's. But we're seeing them kind of evolve into a brand new chain. I mean, they're trying to compete a lot with coffee right now in the US. They're trying to, compete from new models. And I don't understand why. I mean, they have such a bread and butter company. So they're testing out these new things called Cosmics, maybe trying to be more futuristic. I feel like we're going back to the 80s. It's just such a weird vibe altogether. But basically, McDonald's is looking to open up 10,000 sites, like actual McDonald's store by 2027 in China to expand in a more global pace. But they're opening up 10 locations of this new thing called Cosmics, which is more drink focused, I think, which still is selling pretty much the same products McDonald's does anyways. Doesn't make a lot of sense to me. It'll be neat to see how this turns out for McDonald's, but it's just such a weird thing out of nowhere. It's just like, why? Is it really necessary for their business? I don't know. But pivoting to the Canadian side of the market, though, we are seeing a good rally in banks. Very happy with the Canadian markets on the banking sector. As I called it, one of the greatest buying opportunities ever. I think we've seen the bottoms. It's done. It's over with. I still think there's great buying opportunity here. We're up 12% on the Horizons Equal Weight Bank Index. So, I mean, I think we're going to see this trajectory continue into next year, especially as they start talking about interest rate cuts. The Vanguard High Dividend Yield ETF that pays monthly, my favorite, that I've been gobbling up here, has been rallying nicely over the last month. We're not seeing the same kind of gains as the the H Bank ETF there, but we're still up about 7 or 8%. Very nice to see. Oil's trying to dragging on this one a little bit, and that's again when you take a look at crude here, it's tanking, and this is terrible but great at the same time. You can't really complain that oil is tanking. It hurts the markets, but at the same time, this is the end of the inflationary bubble. It's over now. We're done. We're done with inflation. This is going to be the nail in the coffin per se, considering oil affects everything when it comes to housing supply, food costs, travel costs, all of that as we head into Q1 of next year. Coming down, baby. It's over. It's done. We've had our time with it. The market got hit. Great buying opportunities. And again, for all of you that were screaming from the top of your lungs, just buy GICs and bonds and forget about stocks. It's the end of the market. You guys missed out on one of the greatest rallies yet again we've experienced in a while. Again, year to date, you happy with your 5-6% when you could have got 20% plus 1.5% off the S&P? I mean, do you really feel better about that when the TSX here, even year to date, is up 4.3%, but the TSX pays like a 3.5% dividend yield. So you tap that on 4, 5, 6, 7, damn near 8% return, still much higher than your GICs and your bonds. Just saying here, what a thing people are missing out on, in my opinion. And as soon as they can't get that 6% yield anymore, guess what? They're really going to funnel back into the market. So we are in the early stages. You can still buy, still great opportunity, in my humble opinion. And to finish up, I really want to share with you the last interview that Charlie Munger had with CNBC. The dude's a legend. Rest in peace, your soul, good sir. Here's a few clips as I watched this entire hour and 42-minute video. It's really great. It's kind of humbling. Take a listen, but stay cool, stay awesome. And as always, I look forward to catching you in the next one.
Warren has said that his worst trade ever was buying Berkshire Hathaway itself, the mills.
Yeah, sure.
What was your worst trade?
Well, I think my worst trade was buying a block for the Munger family in Alibaba, which is a pretty good company, but I think it got overhyped. And Jack Ma made mistakes in dealing with the Chinese government. I had some everybody has some bad ones.
Yeah.
You have an off day. The greatest tennis player goes out there someday to the center court and has a bad day. It happens.
I think people learn more from their mistakes sometimes than
Yeah, and their
successes.
bad days even.
Yeah.
Yes.
Yeah.
But what really is knowing you can have a very bad day. Do not live your life in such a fashion that a bad day can kill you.
You know, the average person who's looking at this thinking it's going to be harder to buy a house. Is the American dream further out of reach for young people today?
Well, for some it is, and for some it isn't. There also was never a place where anybody who got a degree in computer science got a salary, a cash bonus, and a block of cheap stock every year
Yeah.
for free, just floating in. And sometimes in a very good company. And there are more companies like that are offering benefits like that to people that are just starting out in computer science. So in some sense, it's easier. So for some people, it's easier. There'll always be something in a rich civilization that's a little better than other people get, as well as a little worse. And all these people prospering today in computer science are in the right place, and they're prospering more.